Well, there you have it, folks. Bitcoin surpasses $120,000. We are in crypto week. So we're going to discuss what that means for the industry. We'll talk about the ETF flows and Pump.Fun is in the news again. And there's a surprise Launchpad that is actually doing better than Pump.Fun. We'll get to that. And of course, we'll cover the three top projects that are securing funding with Mike of Deep Ventures. How's it going, Mike?
Hey man, how are you?
Good.
Like my background?
I appreciate your dedication. You're traveling right now. So the fact that you're here, and it's an exciting time. Bitcoin is obviously doing its thing. There's a lot of things to cover. So I appreciate you making the time to connect with me and discuss some of the news that are happening.
Yeah, man, happy to do it. I'm in Munich, Germany right now. I was hiking in Innsbruck, Austrian Alps for a few days, getting that nice fresh Alp air. So clearing my head, I'm fresh now, and that obviously contributed to the Bitcoin all-time highs that we hit. So it's
Of
insane
course.
what's going on.
Of course it did. Of course it did. Maybe you need to travel more often. So
That's
let's
right.
talk about this, Mike.
Yeah.
Let's talk about this. This is fueled by a few things, right? I briefly mentioned the crypto week. There's three main bills that are going to be reviewed, and everyone is talking about how historic this is. One's going to cover the stable coin, one covers digital assets, and the one would prevent CBDCs from happening. Is there any more news that you could share about these three bills?
I think it's just the House is going to dig deep in discussing these bills, in potentially voting on these bills. And like you mentioned, I think the Genius Act focuses on stablecoin legislation. The Clarity Act, I think, is going to be very important because it's going to be a comprehensive market structure piece of legislation that just hopefully will clarify everything from the startups who are building on blockchain to the investors to the regulators. So we're talking about market structure, we're talking about investor protection, and rules for issuing and operating cryptocurrencies in the US. So that's going to be a very broad one. I think it's probably going to take a while for them to kind of hammer everything out there. But then also the anti-CBDC Surveillance Act, which aims to permanently block the creation of a US CBDC, which in Europe right now, and they are pushing forward with CBDC. So you can kind of see the differences in approach across the pond. So three very important bills, and we'll see how the House, what comes out of these discussions and potential votes during this week, which is dubbed Crypto Week in the House.
And I really hope that they stick, that this is something that we can take into our future administrations and it won't be an issue. But to your point, this is something that's going to take some time to play out. And I don't think it's going to be one of those things where all of a sudden, we are in all time highs. I get it, but we might have this, short term euphoria, but long term is kind of what really gets me excited. And also, the other part of this is the Bitcoin ETFs. We had back to back 1 billion inflows. You get more of those, Mike, and I don't know how much more Bitcoin you're going to have left.
Yeah, I mean that's a huge reason why we hit all-time high. So just going back to the price, and think we were a little bit high when I checked this morning. We were almost at 123K. Now we're at 121.7. And overall the stock market was kind of like at least this is this morning, so was kind of steady down a bit while Bitcoin is pumping. So pretty interesting circumstances right now. Like you said, Bitcoin ETFs. I didn't see. Okay, so when I was reading up, I saw over $1 billion of inflows on Thursday. So I guess they hit 1 billion on Friday as well, which is pretty crazy and awesome. Well, what's interesting is Trump announced the 30% tariffs on the EU and Mexico
And we're not
on
phased, right?
Friday. Like, yeah, like I don't know. Like I thought that would be there's going to be more macroeconomic uncertainty. We don't know what Trump's going to do with these tariffs anymore. That was maybe we're just moving past that, and maybe just, that's just a fact of life of what's going to happen, and we're not faced. Or maybe that it's the macroeconomic uncertainty makes Bitcoin more attractive, right? As an inflation hedge. Who knows? Like I'm reading all these signals, and yeah, it seems like obviously the Bitcoin is reacting positively to that news, a bit backwards in my mind. But crypto treasury companies, right? They're all in massive profit, and I don't see that train stopping. They're all buying, the strategies, the meta planets. They all continue to buy, and they all say, well, at least Saylor says he's not selling. And I heard he's 30 billion in profit, I think. So, combine all those signals, all those strong metrics with the crypto week coming up, and it's this is how we end up at the all-time high.
I think I saw a list of the wealthiest people, and I want to say Satoshi's right behind Warren Buffett. Ironically, because obviously Warren Buffett says that it's rat poison. So we'll see how that plays out for him. Pump.Fun is back in the news. They just had a launch, one that would, people would say is a successful one. I want to say, even burn tokens. And so that got people excited as well. Can you share some details about this raise?
Yeah, so they did an ICO, and this is on July 12th, I believe. They raised 600 million in just 12 minutes from investors. And so, kind of details of the sale is they involved 150 billion tokens priced at 0.004 each. It's leading to this $4 billion um, fully diluted valuation. But it's interesting, right? Like if obviously Pump.Fun was this darling of this meme coin craze that happened in kind of Q1. But all their numbers trending down, right? In January, their Launchpad volume was above sorry, 11 billion. And just last month, it was just about a third of that. Monthly revenue, kind of similar path. It was 133 million in January. Now is in June, it was 34 million. And like you mentioned in the preview, there's a competitor from the Bonk crew. Let's Bonk actually surpassed them in token launches per day recently. So and I think look, we're talking about the meme coin season being over. People, so many billions were extracted from the system. People are tired about that. Will we see a comeback? I certainly don't think to the level that we saw in the earlier months. But so I think what people are kind of speculating on here with Pump.Fun is like they saw the pump swap. They're doing double digits of billions of volume per month, so that's obviously a positive development for them. And there's the revenue sharing the token holders. So that's a good design for tokenomics, and that's what a lot of people ask for in terms of being a token holder. So they're still making revenue. They are still building new products. They've got these kind of grand visions of, I think they said, taking down Facebook, Twitch, TikTok. So, people are, they've got this combination of a very recognizable brand with some developments outside of what has been their core business, which has been, declining rapidly. But people are speculating on that, and hoping that they're able to build new products to make up for their loss in all this launch meme coin launch volume.
Yeah, and I'm wondering if this whole let's bonk thing, is it just degens having ADD, or is there actual value proposition here?
It's essentially very very similar, launching a meme coin with and getting the kind of past those liquidity minimums. I mean, it kind of shows that there is still some life in the meme coin world.
Mhm.
If you're looking at crypto Twitter, you're seeing still the supporters of Pump.Fun and what they have in the future. And then of course You're seeing the naysayers of how meme coins, they're value extractive, they're not additive to the industry. That's kind of in the camp that I'm in as well, primarily because and I'm not against meme coins overall. I've certainly held them and bought them and traded them, but I think just the way that it has negatively impacted the liquidity and some of the success of some of the real products that are being built, and really turned yes, onboarded some people to crypto, but it's really turned a lot of people off to crypto, and has given crypto, the overall industry, a just a bad name. I think that is, that's the side that I stand on. But hey, they've made revenue. They've had traction. Can't blame anyone to think that they can't do it again.
Value
Keep going.
extraction aside, you can't argue that as far as a business model, it works. And on top of that, one of the founders went on an episode of Bankless and even addressed some of these issues. So I do like the fact that they're tackling this head on. I don't feel like this is something that they're just trying to have fun, no pun intended. I think that they're treating it as a serious business, which is good to see, and hopefully that will spin into a more positive thing.
Kind of can't have it both ways, right? A lot of people have been talking about the back to fundamentals revenue, revenue generating protocols, and that is exactly what Pump.Fun is. They have been generating revenue. They continue to generate revenue, not at the levels that they were in the past, but now they're creating new products that are also generating revenue. So you can say that, oh yeah, Pump.Fun, we're all going towards revenue generating projects, but like, oh, just not this kind of revenue generating project. So I think, which one is it? Which one do you want? So I think it's just, you've got so many people on both sides of the debate. Is very controversial project, a very, very divisive project, but they're building great products. They may not be the products that a lot of people agree that should be built, but they are making money, and they've now have a big war chest to launch new products.
I don't think anybody is fazed by the fact that if you walk into a casino, more than likely you're going to lose money. But for some reason, we don't have that same expectation when it comes to Pump.Fun. And I think we need to just recalibrate that. And it's going to take some time. As adoption increases, I think people will realize, okay, that I'm just walking into a casino. I'm going to have a little bit of fun. I'm going to have this amount. If I lose it, oh, well, I had fun playing.
Yeah,
And
yeah,
that's
but
the
there's
mentality that
not many people have that mentality in crypto though, right? Like
because they're not educated.
yeah,
I
they
mean,
they, they
I think
just they see the upside only, and they don't want to imagine the downside. They don't want to take it as a form of entertainment. They want to make life-changing money extremely quickly, and 99% of them will lose and never come back, and that sucks, right? Like that sucks because you know what you're getting with gambling. You know what you're getting with sports betting. Many people take it too far, but many people understand that it is a form of entertainment. And I don't think that to the extent that that's the mindset that should happen in crypto. A lot of people don't have that mindset, and they just want to make life changing money very quickly.
well, let's talk about some products that are changing lives very quickly. We're going to talk about three projects that have secured some serious funding that are trying to make an impact in this world. And let's start with Agora. What can you tell us about them?
Agora financed their stablecoin infrastructure. They raised $50 million in a Series A round led by Paradigm. So they have their dollar-backed stablecoin AUSD, but they also have a white label service that enables businesses to launch their own branded stablecoins using AUSD as a base. So what that means is, and all these branded stablecoins share this unified liquidity pool of AUSD. So they don't have to start from scratch and build their own liquidity, which is makes it much easier to get that early traction and achieve scale. So pretty unique mechanism there. So In terms of the fundraise, they're going to focus on the growth of AUSD outside of the US. And we talk a lot about this with, where are the true needs of crypto and where is that happening is, basically mostly emerging markets outside the US, where there's, more demand of stable coins because the financial rails are not as prevalent. There's poor economic policy, and that leads to volatility of their local currencies and the need for cross-border payments. So that's where Agora is going to focus a lot of their efforts with this latest raise.
Very much in line with this week too, since we just talked about stable coins and the regulation. So it will be interesting to see how that plays out. And looks like they're across all the major chains. You've got Arbitrum, AVAX, BNB, Ethereum, Injective, Solana, Sui. I mean, you name it. Across the board, they seem to cover a full spectrum there. Next, Mike, well, let's talk about Kuru. Obviously, Monad has been making a lot of news. There's been a lot of attention about their launch, but you haven't been quite hearing a lot about the application. So this is the first time that I'm actually getting exposed to one. So I'm really excited to hear what Kuru Exchange is offering.
Yeah, so their on-chain order book exchange, they raised 11.6 million in the Series A round, led by Paradigm again, with participation from Electric Capital, Credibly Neutral, and others. So there's been a lot of talk of these CLOBs, these central limit order book exchanges. We have like the Uniswaps of the world that are automated market makers, right? They have, one side of liquidity of one token and another side of liquidity of another token, and then you swap between those two tokens in the pool, and it follows the K equals X times Y automated market making equation. And but what clubs are, they offer this trading experience that's more similar to a centralized exchange, with the order books, like the buys and sells on each side, that you can see all that data. But all that data is on chain for full transparency, and more decentralization. What this does is that it facilitates a lot of things that you can do on an exchange, just like limited market orders, view that live order book, and all these kind of advanced trading tools that you see on Binance or Coinbase Pro. You can now see these on exchanges like Kuru. So yeah, just a lot more functionality that for advanced traders, but with the decentralization. And like you mentioned, look, Monet has been in the news a lot, and not so much recently because there's a lot. They've been delayed a lot in terms of the launch of the mainnet, but that's coming in September, and I think we're going to see more and more raises by teams building on Monad coming in the next few months. It is tough to be an L1. Nowadays, a lot of competition. Monad is building a very high performance L1, and they've been very very kind of open about the delays and things along those lines. But obviously, very very hyped in the past, and I think we'll be seeing a lot more fundraisers from the teams building on top of Monad very soon.
And it seems like Paradigm is just not stopping at writing these
Yeah.
checks. And the other observation I'm making here, Mike, is you're starting to see these decentralized exchanges mimic some of the components of centralized exchanges. And when teams are looking to get listed, yeah, of course, they would love to get listed on Coinbase. They would love to get listed on Binance. But when you're talking about mid tier, lower tier centralized exchanges, teams are looking at that and they're saying, look, it's just not worth it anymore. Like I could just get a similar experience just by getting listed on a decentralized exchange. I think that's part of the issue that a lot of the centralized exchanges are having is that the technology is starting to catch on for some of these dexes.
Yeah, and I think we've seen some statistics. I don't know what the latest are, but where DEX volumes have surpassed a centralized exchange volumes. And when you make trades on a centralized exchange, that experience is just so much smoother than DEXs. And then you can bring some of that UX and some of that functionality to a more decentralized version. That's a huge thing. We'll see whether or not the traders make that move and make that transition over to to the decentralized counterparts. But I think it makes a lot of sense, right? And like you said, for listings, decentralized exchange listings, like that shit is broken. If you've built a a big, fast growing, successful project, you're bringing in revenue and you're very, you've got a lot of revenue and you're stable, in your fundraisers and whatnot. Like you've got high trading volumes. Like you don't need centralized exchanges, right? Like they list for you because they want your volume. But then if you're a smaller, newer project, centralized exchanges are charging three, four, $500,000 in fees and liquidity. Early stage projects don't have that money. Is just a terrible, terrible model for the early stage projects. So, if you have the ability to just launch on a DEX, hopefully with more traders on that DEX with the club and getting that volume there, that's a win for the project. So, obviously I support that.
And sticking with the trading theme, Mike, you've got OAXBT, which is a AI trading platform. Is that correct?
Yeah. It raised 3.38 million in a seed round, led by Amber Group with participation from DWF, Mindfulness Capital, and some others. So what's interesting about this is that instead of having kind of like a single model, they have this marketplace of interoperable MCP servers. This is Model Context Protocol. So there's like APIs into different data sources that feed into the model and then uses that data to make these trades. So it's kind of more real time. So for instance, if someone says, should I buy or sell Bitcoin right now, right? Like it'll bring in data from on chain. It'll bring in sentiment data from Twitter potentially. There's live market data providers just bringing in kind of more real time data into the model to make these decisions, as opposed to kind of just having this model that pulls in data once per day and uses that to a little bit of a slower, less updated process. So a pretty interesting setup here. There's also other features like kind of a chat to earn trading terminal, and you can monitor whale activity. But yeah, I mean, we talk a lot about AI trading nowadays and the funds that they're raising. And this MCP approach is pretty interesting.
Yeah, for sure. XBT, correct me if I'm wrong, but they're not they're not new. They've been around the whole like AI movement before, right?
They've been around. I mean, I don't know, not in this specific form, but yeah, they've been around for a little while. I've been following their Twitter account for a little while.
Okay, well, they also have upcoming TGE, so we can read into that. That's a good place to stop, Mike. I know you're on your travels, so again, appreciate you hopping on. For those that are watching, subscribe to the channel, like the video, visit networkspotlight.io and become a member to chat with me, chat with Mike, and also visit deepventures.com or .io, I should say, and sign up for Mike's newsletter. He puts it out once a month where he covers some of these groundbreaking Web3 startups. That's all from us. Thanks so much for watching. We'll catch you guys in the next one.
All right, everyone. See you.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.